Volume is the most important factor in determining whether an asset's worth will increase or decrease. You can forecast whether the price will rise or fall with accuracy if you know how much bullish or bearish volume is presently active in the market. Simply take a peek at the order book, which is accessible on almost every exchange. Anytime there is an increase in purchase orders, it indicates that there has been a large influx of bullish volume, which has driven the price up. You will be able to exclude ranging or sideways markets by understanding the volume of the market. The top 3 volume indicators that enable you to make informed and precise price predictions will therefore be covered in today's film. Third on the list is a straightforward but extremely effective volume gauge that can be used to spot market trend changes. Let's track this indicator now. Look for the volume flow indicator under the indicator search option. Choose the lazy bear indicator and add it to the display. We will also look for the EMA indicator and add it to the chart so that we can demonstrate a simple strategy with the volume flow indicator. The popular OBV indicator is the basis for this indicator, but there has been a significant modification made. The indicator values are no longer meaningless. When the sign is in the positive territory, we can assume that the market is bullish. When it is in the negative territory, we can assume that the market is bearish. The settings for the volume flow indicator won't change, but we will fix the EMA length to 100. To make it simpler to see, we'll then also change the color to white. Let's now examine the indicator's potential applications. Let me first give you an illustration of a buy entry. The price has now crossed over a recent support level, as you can see here. The price is currently moving above the 100-period EMA, as well as can be seen. Finally, we observe that the volume flow gauge has moved above the zero line and turned positive. This suggests a bullish shift in the market. This will serve as our entry signal into the purchase position. The most recent swing bottom will serve as our stop-loss point. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was extremely successful. Let's now search the market once more for an entrance. The volume flow indicator passed below the zero line, as seen here. The price is also selling below the 100-period exponential moving average, as can be seen. These signs collectively show that the market has started to trend downward. At the moment where the volume flow indicator crossed below the zero line, we take up position. At the most recent move high, we will place the stop loss. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was once more extremely profitable. Let's now examine the second sign that will enable you to minimize losses to the greatest extent. Look for the heat map volume indicator under the indicator search option. Choose the XD cow indicator and add it to the display. Using this indicator will help you make sure that your tactics are as profitable as possible by removing as many losses as you can. Simply put, the indicator changes the hue of the bars and candlesticks according to the volume of trades. We will go to the indicator settings and select the inputs page to optimize this indicator. There are 4 volume limits, as we can see. The high volume level will be increased to 1.5. The medium volume level will then be changed to 0.5. Only when the volume is at the medium level or higher, out of the 4 levels, will we move into a place. In this case, the bar will be colored yellow, orange, or red. As you can see, the number rises each time the price experiences a significant change. This implies that we can use the indicator to exclude markets that are ranging or moving sideways. It goes without saying that you cannot enter the market using only this indicator, but for the showcase I will give you some examples of entries so that you can better grasp how to use the indicator. The price passed below the 100-period EMA, as you can see here. You could say that this suggests that a bearish pattern is beginning and that traders should take a sell position. However, the volume indicator shows that there isn't enough traffic to drive the price even lower. So it wouldn't be a smart idea to take a position here. The only difference between what occurred here and what happened there, as you can see, is that this time the volume indicator indicates that there is a lot of volume in the market. This indicates that there will be sufficient demand to drive the price even lower. So let's take a sell stake at this point. The most recent swing high will serve as the limit loss point. We plan to aim for a risk-to-reward ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was extremely successful. As you can see, the price crossed below the EMA, but the volume indicator shows that the market is presently experiencing low volume. This indicates that we shouldn't engage in the trade, but let's see what occurs if we do. The trade did not turn a profit, as we had anticipated. So let's now watch for a signal where there is sufficient market activity. As you can see, the price crossed above the EMA. In addition, the volume indicator shows that the market is presently experiencing high volume. We will take the purchase position after receiving this confirmation. We will set the stop loss at the most recent swing bottom and aim for a 1.5 times risk-to-reward ratio for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was extremely successful. The VSA indicator is the final indicator we'll examine. Click the Indicator Search tab and seek for the Volume Spread indicator. Choose the indicator that this user of the TradingView created, and then add it to the display. Let's now examine the advantages that this gauge has. The fact that this gauge shows what market leaders or whales are doing is its most valuable advantage. The indicator is also a non-lagging indicator, which means that when you glance at it, you can see current market data. The indicator can be used to gauge a trend strength and determine whether it is gaining or losing progress. So let's look at the indicator's potential uses right now. As you can see, the volume level drops whenever we reach a ranging market. However, the volume amount rises whenever the market begins to trend. So let's now look at how we will use the indicator to establish a position. Although the price has passed below the EMA, as you can see, the volume indicator is showing a green bar. This suggests that the market has a small quantity of volume. When the bar is yellow, it means there is a medium amount of traffic in the market. When it is red, there is a high amount of volume. We won't take the position because of the minimal volume in the market. Instead, we will wait for a stronger signal. The price passed above the 100 EMA, as you can see here. Additionally, we notice a yellow bar, so we'll take a stance. At the most recent swing bottom, we will place the stop loss. We plan to aim for a risk-to-return ratio of 1.5 times for the take profit. Let's now watch to see how the deal turns out. As you can see, the transaction was extremely successful. If you want to see one of my other trading strategies I use when day trading, check this video right here, because this strategy works great on the every time frame you want. I'll see you guys next time.